Let's take a broad look at the markets, including gold and those AI stocks. We're joined by Skyler Weinand, Chief Investment Officer at Regan Capital. Skyler, thank you very much indeed for joining us. I'm not sure if you saw that headline. The Bank of International Settlements, the international banking watchdog, says gold may be in a bubble. It's concerned that both tech stocks and gold have been rising this year, hitting records, and it says that's very unusual. What do you think? Could gold be overheated right now?
It's definitely had a tremendous run, and part of that is this trade war, so to speak, where China, foreign governments are getting a little bit nervous about owning dollars in U.S. treasuries, and are instead plowing that money into gold. And gold, for most purposes, has very little value. It yields nothing. There is some industrial use, but it really is just stockpiling. So if you look at gold, you look at crypto, you look at some of these AI stocks that are spending a tremendous amount of money. The big question looming, that bubble question, is this money going to productive use? Or is this actually going to generate anything in the future? Or are folks just getting nervous about where their money might be going in the future?
Would you be inclined to bet against gold, though, after this huge run-up?
Gold's always going to have that soft spot in investment portfolio where, you should have 1, 2, 3% of your portfolio in gold, maybe a little bit in crypto, just in case, we hit World War III and there's a huge meltdown. But trading at $4,000+ an ounce, it's getting to that point where, well, maybe I should start selling my gold. So I'm not going to bet against it, but I'm going to think twice about, if that jewelry gets inherited down, whether I wear it or I go sell it.
What about the tech stocks themselves? You think we're not quite in a euphoric enough environment to actually call it a bubble?
Yeah, I don't think we're there yet. And the big reason I say that is leverage, okay? These tech stocks just started borrowing within the last few months. Mm-hmm. Up until now, they were funneling a lot of cash into R&D and future investments. Only recently have Meta and Alphabet come out and started borrowing money to fund future AI expenditures. Now, the jury's out on whether or not they're going to run a profit on AI, right? And so you're looking at hundreds of billions, if not trillions of dollars in expenditures with the hope, the carrots way out there, that they're going to generate something out of that. Mm-hmm. So up until now, you take an NVIDIA, for example, which has gone from $1 trillion to a $5 trillion company. But you had revenues behind that. You had earnings behind that, okay? So, we're just hitting this point now where companies are starting to borrow, and it's going to be a 3-year time frame, I think, in order to figure out whether that borrowed money was actually worth it for them.
Because apparently evidence is emerging that one study, a widely watched study reported in the Atlantic in September, it's a while ago, by a crowd called METR, found that programmers, they were using AI, but the AI was just not reliable. And one person said it was like you're shoulder surfing, you're watching over an over-enthusiastic rookie. And sure, it's fast, but it makes loads of mistakes. So the programmers end up wasting time having to fix the mistakes. Now, I know AI is getting better all the time.
Yeah, the problem with AI is they don't actually have access. These models don't have access to a ton of raw data in primary sources. If you look at the sources of data they're using, the top 2 or 3 sources are Reddit and Wikipedia. Mm-hmm. And so they can't actually access a lot of copyrighted data out there. Music, primary sources, i.e. books, journals, et cetera. They don't have access to that information. And you're actually starting to see these machines create AI off of AI. And so they're writing their own books or writing their own text, and that's a new primary source. And so you're kind of going down this rabbit hole of, what are we looking at? We're starting to put this filter on. Is this image real? Is this movie real? Is this text real or not? And mark my words, being able to read books and being able to read primary sources is going to be a superpower in 10 or 15 years from now, because the next generation won't be able to exist without AI. But that data that AI is using really isn't high quality data.
You mean the next generation of people will be over dependent on AI?
Oh, for sure. I mean, my kids are 11 and 9, and you just look at being able to sit down and actually read a book for 20 minutes is getting harder as time goes on.
Yeah.
Because this generation's relying on YouTube, ChatGPT, the internet, you name it, for a lot of their ability to do homework and to do actual work. And so, like I said, being able to read a book in a generation from now is going to be a superpower.
Whoa, that's a scary prospect, isn't it? I mean, yeah, we all.
I mean, it's thinking about, like, there was a study done that even reading actual text, like printed out material, you're able to absorb about 25% more information than reading it on your phone or on a computer screen, first of all. So then hey, I don't know how to do this problem. So back in the day, don't use a calculator, write it out. Now it's, hey, everything can be done by AI. Everything can be done just by writing in a prompt. And so the high level AI folks now are, I can set good prompts. I'm good at that. So we're getting to this precipice, though, of tons of money is being spent. What is that actually going to result in? And we won't see for 3 to 4 years, at least.
That's interesting. Yeah. I'm glad my kids got through school before this stuff arrived. Yeah, my kids are in their early 20s. They miss the real, the white heat, but you're right in the middle of it, Skyler. Well, thank you very much, and all totally the best to you and your kids, and I get them reading books. Yeah, I know.
Oh, yeah.
Thank you so much, Skyler. I really appreciate it. Skyler Weinand, Chief Investment Officer at Regan Capital.